Hi everyone, welcome back to SAP Insights, the trusted SAP learning channels. Today's session, I'd like to go through some of the industry practice for performing standard cost estimates on a standard cost material and one of the common mistakes made by consultants that leads to price variances. Now, since we will be sharing the common mistake made, we'll also be going through how you can mitigate that to be incorporated the relevant steps for your standard cost run into your organization SOP. Now, before we begin, please do like my video and subscribe to my channel. Your like and subscriptions will keep me motivated in producing quality materials and videos for your learnings. If you need to access to any of the materials or there's any specific questions around SAP that you'd like to find out more, please do reach out to me at the email above and we can discuss further. Now in this slide, we'll go through the standard cost estimate sequence and the priority. In most organizations, the standard cost estimate will follow the sequence of the planned price as the highest priority, followed by the price of the purchase info records. All right. If there is already an open purchase order created, the price from the latest purchase order will take precedence, or the price of from the quotation document as the second priority. Now, once we get the sequence and the priority right, we need to set up the relevant master data accurately in order to achieve this. And the setup is extremely important to avoid what we see in this bottom right screen over here, where a high price variance actually hit into the price variance account when the actual transaction happens. Now in this screenshot, this is an extreme example where prices were incorrectly set up, which causes millions of dollars in the variance when the quantity multiplied by itself. Now there are two key important processes in the standard cost estimates. In the manufacturing industry, operationally, this exercise will be done either half yearly or once yearly depending on the comfort of the management team for their budgeting process. For half yearly or annual process, we typically will perform 3 steps, where step 1, we will obtain the planned price from the procurement team, and in step 2, we execute the CK40N to run the cost estimate for all the materials, and step 3, to validate the new price updated in the material master. Now the planned price is the most important element here for the yearly or half yearly process, right? And if that is not provided by the procurement team, okay, the system will then take it from the purchase info record price, or if there's an open purchase order, then you adopt from the latest purchase order price. Okay. Now you have seen earlier how the price variance is getting hit on the good received document, where we use a very extreme example where $1,000,000 are hitting into the price variance account. And this can be avoided, okay, if we perform a check on the newly created material master. Okay, we should try to highlight here that what are the steps of process for the new material master creation. Now, post material master setup, the finance team should run a CK11N to verify the cost estimate against the material master standard price in the accounting view. If the price is matching up between the accounting view price and the cost estimate price, finance team can then mark and release the price through CK24. And lastly, on step 3, to verify the new price that has been released and reflected in the material master. So we spoke about the importance of the master data setup to avoid the price variance being hit during the transactional documents gets created. Now, in the next few slides, we will look at what are all these master data elements and the key fields that we need to pay attention to. Before we go further, I'd like to ask a favor from all of you again. Please hit the subscribe button and also the like button to support me in producing this video for all of you. Thank you so much. All right. Now in the point 2 here, right, we kind of mentioned what are the key things to take note when we set up the master data, which is important to avoid this price variance in hitting into the account. Okay, number one, we have the base unit of measure or the alternate unit of measure for the mature master. Number two, we have the order unit of measure for the PIR. Okay. Number three, the price unit in the mature master. Number four, the currency in the PIR, purchase info record. And number five, the currency of the mature master. Now, if you look at this screen, all right, this is the accounting view screen for a mature. Okay. How do you know the mature is set up for standard price? You look at the price determination is turned up to 3, mature ledger is activated, and then the price control is setting up to S. All right. Now, for this material, the standard price is set up as $205. Okay, with the price unit of 1. Okay, and the base unit mentioned here is kilogram. And what you're trying to tell the system here is that for this material, the price for this material is 1 kg is equivalent to 205 US dollar. Okay, and we notice here it's all US dollar here because we have turned it on in the accounting view that this is the company code currency for this plant is actually at the US dollar. Now let us take a look at one example, right, where the common mistakes will be made. We have a purchase info record created with one case equals to 240 US dollar. Okay, and in the mature master, we have the base unit measure maintained with each, right, as the base UM, and the alternate unit measure as case, and one case is equivalent to 1,000 each. And this is set up in the as an alternate unit measure for this material. Now in the accounting view of the mature master setup, one price unit is maintained and the standard price is set up to 240 US dollar. And this is a wrong setup, right? And that is because in the mature master base unit of measure, it is set it up as each. And by setting out the price unit equals to 1 and the standard price of $240, it indicates that for one each of this material, the price is 240. However, in actual, based on the PIR, we are procuring in case, and one case that we procure, there is 1,000 each, which is $240 for the 1,000 each, which means one each is actually only costing US dollar 0.24 cents. Now, if we set in a mature master, if we sell it as $240 and the purchase order gets created based on this purchase info record, now when you do a good receive, that's where the price variance will be generated. Because the system is detecting the standard price in the mature master is different from the latest price, which is in the purchase order, which is translating into a 0.24 cents. All right. And to avoid this price variance hitting into the price variance account during the good receive steps, Therefore, it is very important during the creation of any new material, a validation to be done. Okay. Now let's look at some of the best practices, or what can we do to avoid these price variance to be hit during the good receive, right? So when a new material is being submitted for new creation, okay, it is always advisable to the master data team to block the material, right, at the plant material status 01, which is blocking it for procurement and warehouse activities. All right. Now, and why you want to block it? Because you're pending finance validation. Okay. Once you created it, you block it. Now you can inform finance team to ask them to perform the price validation, and how they can do that is through the CK11 end run, right, to check against the price proposed or calculated from the CK11N run against the standard price of the mature master setup. Okay. So in this example, right, the standard cost of this material is showing 214.72 cents for every 25 unit, which is measured in milligram. All right. And what do we get during the CK11-1N run? Okay, the system calculates that for every 25 unit of milligram based on the costing lot size, it is actually $145.23. Now, when the finance team run these results and look and compare against the mature master, obviously it doesn't match up. Okay. Now, finance team will not know which one is right. It can be mature master is set up incorrectly. It can be the purchase info record is set up incorrectly. It can be the conversion factor of the mature master is set up incorrectly. It can also be the currency conversion, right, in the PIR, if it's maintained in if you procure in a Malaysian ringgit or European dollars or Singapore dollar, where the conversion factor is set up is converted incorrectly, that causes the variance. Now that will then be flagged to the master data team to do a final validation to fix the necessary error before you release the before you remove the block in the plant mature status to allow procurement and warehouse activity to proceed. Okay. Now, if you have a price that is set up incorrectly in the material master, at this stage, before any procurement activity has been carried out, you can use MR11 transaction code to do a price change document to post a price change on this material before releasing it for procurement to um, do the subsequent downstream steps. All right, that's all I have for this standard cost estimate video. I hope you like it. And again, thank you for your support, and please do hit on the subscribe button to stay tuned for more learnings video. Thank you so much.